So undoubtedly, macroeconomic trends have always been challenging for CFOs. There are periods when they are more challenging or less challenging. The current macroeconomic trends of high inflation, higher interest rates are going to be around partly probably. Inflation probably will moderate. Interest rates are likely to stay relatively higher, and no doubt there'll be some other trends that challenge CFOs.
I mean, I think there's a fairly easy question. If you asked most CFOs what have they been most concerned about economically in the last couple of years and going forward, it would probably be inflation and interest rates. I think, on the inflation side, that's impacting in really two ways. One, on the consumer, who is more cash constrained, and therefore if you're in a consumer business, particularly selling discretionary spending items, non-food, televisions, electronics, there's obviously an impact on demand.
There is such a focus on sustainability, and I think that the CFO plays an absolutely critical role in these conversations to look at the well-being of their companies in the most holistic sense possible.
I think the other aspect though, of course on companies' cost base, and if you look at the tight labour market and wage rate inflation sort of running about 7% in the UK, I personally don't see that going away anytime soon, and actually leads into another challenge, which is the war for talent, which is really well qualified talent is very, very hard to come by, and that continues to drive inflation.
And I don't see that the expectations of a range of stakeholders, and not least our investors, will dissipate around this agenda. So I very much see that CFOs will need to continue to try and understand what is required to do the gap assessments from what they disclose presently today to what they will need to disclose in the future. And their finance teams will be absolutely in lockstep with other colleagues throughout the business who will be responsible for reporting against these initiatives.
The other part of it, obviously interest rates, we've seen a much bigger rise there than before. Most businesses and business leaders haven't managed high interest rates because since 2008 we've had such a long period of almost free money. And that's, again, having sort of two pretty obvious effects. One is on liquidity. If you've got a reasonable amount of borrowing, you're spending a lot of interest payments. And then the second one is just around investment, because the cost of capital's gone up. And so you're seeing less private equity activity. But even within companies, there'll be a lot more pressure to really justify the returns, and there'll be a squeeze on investment in many businesses.
So I think you've always got to accept that there will be macroeconomic trends challenging CFOs. That is the role of the CFO and the rest of the executive team to try and win as a business despite the macroeconomic challenges.